Today we're going to talk about one of Warren Buffett's biggest holdings, Apple. Reported earnings this week. Nice uptick afterwards, but the key today is going to be looking at multiple time frames, the short-term bounce, the medium-term consolidation, the long-term uptrend. Before we get to those charts and why Apple may be a compelling play right about now, there's one more thing I want to tell you about. I'm a technical analyst, which means I spend hours every day looking at hundreds, if not thousands of charts. But in my own decision-making process, it's not purely technical. I actually spend a decent amount of time looking at fundamental factors that are actually driving companies and empowering them to grow for multiple years going forward. I look at macroeconomic data like the Fed and inflation and interest rates to think about how all those factors might impact those stocks and ETFs that I'm looking at. And I also have learned from spending years working with institutional investors that having a good quantitative model is super important. What a quantitative model does is basically look at the characteristics of successful stocks, looks at all the factors, technical, fundamental, everything, and wraps it into one rating, and then allows you to focus on the best opportunities within a particular set of stocks or ETFs. The good news is, as an individual investor in 2024, you have access to a pretty decent quantitative model through Seeking Alpha. If you go to marketmisbehavior.com/seeking alpha, you'll be able to take advantage of their quantitative rating. They actually have a pretty sophisticated quant model that is driving their quant rating. You can then cross-reference what we're talking about on this video is looking at the charts of leading stocks, looking for big base breakouts and good technical opportunities, but also look to see if the quantitative model from Seeking Alpha supports the upside potential of those names. So go to marketmisbehavior.com/seeking alpha to find more information. Usually get a better deal for you. It's an affiliate link, which means it helps me make Market Misbehavior awesome, and we're all happy. So check it out, and let's get back to the charts here. So the key with multiple time frame analysis is we're going to be looking at three different time frames: short-term, medium-term, and long-term, and really think about how they relate to one another. Now, as an example, we're going to look at Apple Incorporated. Apple, of course, making a decent earnings win this week. While iPhone sales were down, a huge buyback, increase in dividend, all providing some upside momentum for Apple as we wind down the week. As a lot of investors are making their annual pilgrimage to Omaha, Nebraska to hear from the great Warren Buffett, it's worth noting Apple is, at this point, I believe, still his largest holding for Berkshire Hathaway. At times, 50% of his equity portfolio has been in this one company, in Apple. Now, Warren Buffett is known for having big, concentrated positions in key blue chip names. And I think the long-term story as to why Apple has been and arguably continues to be a compelling long-term opportunity is because those are the types of names that Buffett is famous for identifying. Now let's think about these three time frames one by one as we get to the charts here. Now here we're looking at the chart of Apple. I'm looking at a 2-year daily chart. So at the top we have daily price bars, the 50-day moving average in blue, the 200-day moving average in red. We have RSI, my favorite measure of price momentum, and then at the bottom, relative strength. Now let's start at the top and then work our way lower. Thinking just about the short-term time frame. Now the short-term time frame for me is a couple days to a couple weeks. Really thinking about sort of that tactical time frame and what sort of most recent data we can gather by how this stock has changed over the last couple days to a couple weeks. Now, of course, you're immediately going to notice the gap higher. Now the day's not closed just yet as I'm recording this, but you can see Apple currently up about 7.5%. You can see we gapped up to open around 187, traded down around 182, for now around 185. We'll see how things close through the remainder of the day. But I would say in the tactical time frame, what's important is, do we close above the 200-day moving average? Because earlier this week, we have a stock that's making lower lows. We have a stock that's making lower highs. We have a stock that's failed to get above the 50-day moving average. But today, we gap above the 50-day and above the 200-day moving average. What's also interesting on that short-term time frame is the RSI has now broken above 60. And for me, that is often not a red flag, probably a green flag, I would say, sort of a bullish indication, because generally speaking, stocks only become overbought in rally phases, right? That's when things are going well. When the stock is unable to get up to that overbought region, like you see here in September and October of last year, like you see here in January of or March or April of this year, that's a sign that there's not a lot of accumulation happening, because if a lot of institutions are buying, it tends to push the momentum much further. So the fact that the RSI is getting above 60 on this rally is actually probably the most encouraging sign we can see. Also note how the relative strength is now almost making a new 3-month high. So the relative strength has been very underwhelming so far in 2024 as Apple has been languishing while the major benchmarks have been trending higher. That all of a sudden starting to change with the gap higher really pushing the relative strength up to the upside. So in the short-term tactical time frame, we could recognize the gap higher. We see that's related to earnings this week, and all of a sudden we can notice to the left where we're at relative to key resistance, which is currently around 197. Now let's get to that medium-term time frame. Think about some of these other lines that I've drawn on here, and I've drawn some Fibonacci retracements. So if you take the January 23 low and the July 23 high, 38.2% of the way down is around $169. And note how that September low almost perfectly hit that first Fibonacci support level. Now, subsequent lows have either found support right at 169 at that Fibonacci level or briefly gone below, but note how it's only gone below for like a day or two before you've seen buyers come in. So some people are really sticklers, really particular about Fibonacci levels, and they think, all right, 169.04 is the level, and if we go below there, then it's broken or it didn't work. I think support and resistance levels should be thought of more as support and resistance ranges than support and resistance levels. I think expecting a stock to hit a particular exact point like 169.04 is pretty antiquated. I tend to think of it as having a little wiggle room. So I would see this move in October where we undercut that Fibonacci level as just a generally accepted brief dip below that level before the buyers are able to come in and push the price back higher. So I would consider these actually respecting that Fibonacci level and noticing that, generally speaking, that's kind of where we found support. So I drew a second line down here around 165, which really was the ultimate low in October, and we can find that lines up with the low in mid-April. So this range from 165 to 169, there's my support level. Now if you look at March and April, you can see that we are basically finding support at an expected level, expected range between 165 and 169. So the action leading into this week's report, while not blow the lights out positive, has been encouraging in the fact that it hasn't really broken down through an expected level of support. Now, as we think of this sort of last year, year and a half, you can see how this range from around 165 to 169 on the lower end, 195 to 200 on the upper end really captures this trading range. And I would think of this as a broad basing pattern. The stock has basically been range bound between support and resistance. So from a medium-term time frame, you're really looking to see which way we exit. And even with that gap higher, which is encouraging on the tactical time frame, on this medium-term time frame, it's really not super bullish just yet. The bullish signal would be with a break above 200, which would get us out of this range and tell us that the medium-term time frame really starting to improve because new buyers are coming in or people are finally willing to pay more than $200 a share for Apple. But all of that I've just shown you is not the most compelling piece of evidence that I can show you. Let's take a step back in honor of the great Warren Buffett, doing the Berkshire annual meeting here with thousands of investors going to Omaha, Nebraska to hear the latest wisdom. Unfortunately, the first one without Charlie Munger, by the way. But as we're looking at the weekly chart of Apple, and I'm going back for the last 16 years, you can see why Apple, is one of the key holdings in the Berkshire portfolio. Look at the trend in Apple over the last 16 years. Coming off of the 09 low, look at how when we take a step back on this monthly chart, you can see that Apple has been remarkably consistent at making new highs, making higher lows, making a new high, a higher low, a new high, a higher low, and we continue that pattern really all the way through more recent history. And you can see that these pullbacks that we've had in 2022, the pullbacks that we've had in 2023 on that daily chart, they look like these significant drawdowns, which they are on that time frame. But on the weekly, on the monthly time frame, you can tell that those are just sort of normal pullbacks within a long-term secular uptrend. Now, I have two moving averages on here, the 40-week moving average, because it's very similar to the 200-day moving average, right? So on the weekly chart, I like to use the 40-week moving average because it represents that 200-day, which so many investors, including myself, pay attention to. As I mentioned, you can see we're breaking back above the 200-day or the 40-week this week, potentially going into the close. But the purple line is even more meaningful. Since the 09 low, look at how many times we've pulled back to the 150-week moving average here in 2013, which ended up being a great buying opportunity into 2014. In 2016, we hit it a couple times, which ended up being a great buying opportunity into 2017. At the 2018 low, we once again hit that 150-week moving average, ended up being a springboard to new highs by the end of that year. We hit this level once again at the end of 2022, suggesting that early 23 would be a decent upswing, and we once again have gotten back down to the 150-week moving average. So since the 2009 market low, that great financial crisis bottom, touches of the 150-week moving average have ended up being fantastic buying opportunities for Apple. Also notice how the momentum is overall pretty constructive on this time frame. The RSI in 2022 and 2023 and now in 2024 has remained above 40 when it's pulled back. So those tests of the 150-week moving average have come when the momentum is remaining in a bullish range, and that's certainly what we've seen here in the last couple weeks. We're very close to a weekly PPO or weekly MACD buy signal. Those have, confirmed a lot of times when we've tested the 150-week. That buy signal usually has come soon after, and it's ended up being a fantastic buy signal. Even if at the 09 low, after we broke below the 150-week moving average, you saw a buy signal there in January of 09, ended up indicating a reversal off of those lows. So we have not quite done so, but I'll be watching this weekly chart very closely in the next week or two, because a buy signal there would basically complete that pattern, indicating that once again we have a bullish setup over the long term for Apple. What do you think about this multiple time frame analysis for Apple? Do you see how we were able to compare the tactical, that short-term time frame, a couple days, a couple weeks, to the medium-term time frame, looking at the last couple months, to the long-term time frame, looking at 15, 16 years of data? Multiple time frame analysis is an important part of the technical toolkit. Don't just get caught looking at one time frame and drawing all your conclusions there. Consider multiple time frames and think about how different phases relate to one another. For Market Misbehavior, I'm Dave Keller. Have a great one. We'll talk to you again soon.